My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to the West Coast edition of Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Innovation is the lifeblood of capitalism. And these days, that makes Silicon Valley's capitalism global headquarters. On a day where the averages rolled higher, with the Nasdaq leading the way, up 1%, while the Dow gained 83 points, the S&P inched up 0.7%, we are here to cheer the most dynamic economic system in history. Now, capitalism is under assault right now, and taking its lumps like we haven't seen since maybe the Great Depression. Now, some of that is self-inflicted. We have real problems with income inequality in this country, and sometimes it's really in your face, like the $62 million that Boeing was contractually obligated to pay Dennis Muhlenberg, the now former CEO, who was fired for failing to fix the 737 MAX after not one but two tragedies. Can Boeing's new CEO, David Calhoun, change the company's trajectory? Can he change a corporate culture that seems to have gotten rotten in light of some of those very ugly emails that came out? It appears that some engineers at the company flat out deceived federal regulators about the need for more pilot training to handle the MAX. But pilots really did need more training to handle all the new systems, as the company made clear last week. Boeing's really not putting capitalism's best foot forward here. Undeniably so. Hey, but you know what? Let's not throw the baby out with the bathwater. I think capitalism still has a lot going for it. And that belief stems from everything I see happening here in San Francisco. Now, we got a real windfall here. This week, JP Morgan's hosting the largest healthcare conference of the year. It's out here, and we're going to be exploring all the new drugs and devices that these companies are working on. Every year, there's a theme to this conference. And this year, the theme, personalization in healthcare, a system that increasingly runs on the customer, on your choice. Now, when you listen to the Democrats running for president, you hear that there's a lot wrong with our healthcare system, and that's true, although that doesn't necessarily mean that single payer is the answer. However, I don't want to lose sight of everything that our system does right. First, we recently heard about a dramatic decline in cancer deaths. Now, some of it is because innovative drug companies are slowly but surely finding more and more ways to beat this horrible disease. For example, Bristol Myers has the best oncology franchise around here. And you know what? They've merged with Celgene in a deal that announced a year ago that's already paying dividends. And I don't mean the bountiful 2.72% yield that Bristol pays its shareholders. The company's oncology drugs, Opdivo, Yervoy, and now Revlimid from Celgene are being studied in a variety of different cancers. When we met with CEO of Bristol Myers, Giovanni Caforio, this morning, he talked about drug price restraint. I think the restraint is real. I think these drugs are saving lives. Or how about Emma Walmsley and GlaxoSmithKline? What they're doing to advance the early treatment of ovarian cancer. Do you know that they're teaming up with 23andMe to figure out who's most susceptible to these diseases for early detection? Talk about personalization. Sometimes it's only the lack of awareness that keeps these life-saving innovations away from people. Then there are vaccines. Glaxo is the vaccine king. Do you know they invented a vaccine for shingles, one of the most painful illnesses that you can get, and a third of Americans will get it. It doesn't have to happen, people. We can wipe it out. You get the vaccine. You don't get shingles. Or how about CVS Health? Now, here's a company that's changing the healthcare paradigm. No longer willing to be pegged as a corner drugstore, CVS has stepped into the consumerization of healthcare in a major way. Right now, they're testing out health hubs, giving you care in store that you normally have to see a doctor for. Currently, it's still a trial, but they're planning to expand this program to 1,500 stores. Now, if you already have a general practitioner, that might not be a very big deal, but tons of young people don't have regular doctors. It's not their style. So what do? They go to the emergency room when they need help. CVS might be the answer to that breakdown in the healthcare system. Plus, now that it's merged with Aetna, it can help 50 million baby boomers figure out what to do with all these forms of Medicare insurance. I need help myself. Remember when CVS was supposed to be Amazon roadkill? Remember when Walgreens was going to take all their business with Theranos machines? Oh, don't have the soundboard. Remember when it voluntarily took $1 billion tobacco hit when the CEO, Larry Merlo, who will be on with us later tonight, decided that CVS couldn't both be in the business of healthcare and also sell cancer sticks? The company has triumphed over every single one of those worries. And don't forget about GW Pharma. Now, we've pretty much given up on the Canadian cannabis stocks, right? I mean, wow, they're crushing you. Maybe medical marijuana will eventually make a dent in the U.S. healthcare system, but it's unlikely to happen anytime soon. But GW Pharma makes cannabis-inspired drugs. And yesterday, the company pre-announced a gigantic $100 million plus quarter. This company makes a thing called Epidiolex. It's an artificial drug that mimics some of the properties of marijuana in order to help young people with epilepsy. GW is speaking at this conference to talk about the dangers of that disease, and the strength of their marijuana-adjacent medication ignited the whole cannabis cohort, even though, once again, their cannabis is not real cannabis, it's artificial. So don't get too excited. I am still cautious about this group. But we sure like what we heard about Canopy Growth last week. That's a Canadian cannabis kingpin. When we had Bill Newlands, the CEO of Constellation Brands, on, they own a big chunk of Canopy. I say be careful. And Canopy up 10% today. I don't know. I don't see legislation happening in America anytime soon. They're not going to legalize it nationally. And that's why GW Pharma's legal artificial marijuana is able to outsell pretty much the entire industry. That's why that's a better stock now. Of course, the rally in the Nasdaq wasn't just about healthcare. The 5G wireless story that we keep flogging worked again, with Apple leading the way, followed by a host of semis and cell tower stocks. I keep telling you that 5G is a huge theme, one that's still in its infancy. Don't give up on it. Don't flip these stocks. Don't say, you know what, I'm going to make a couple bucks and go. Well, that'd be wrong. The cybersecurity stocks erupted, too, as we heard rumors that the U.S. was about to launch a cyber attack on Iranian infrastructure. That would certainly require mandatory cyber protection. So we saw the stocks of CrowdStrike, Zscaler, and Palo Alto surge, although they gave up some of those gains near the bell. Plus, it's worth noting that Alphabet is nearly $1 trillion stock. Now, I don't like this move. It's based on nothing fundamental, just the momentum that we see in so many tech names. More on that later. We're witnessing the same thing in two other stocks in the $1 trillion club, and that's Microsoft and Apple, which means their stocks may not be able to withstand any earnings results short of a super beat. Not just better than expected by a couple of pennies. I don't know if that's even possible. Hey, by the way, Facebook's in the same boat. But the bottom line is simple. Innovation drives capitalism, and capitalism drives innovation. You can't have one without the other. Believe me, it's been tried, and it hasn't worked. Let's take some calls. I think we should start with Kyle in Pennsylvania. Kyle!
Hey, Mr. Cramer. How you doing again?
I am doing well, Kyle. What's going on?
Good. I again want to start off saying thank you for inspiring the younger generation, including myself. And so a while ago, I opened up positions in Dollar Tree and Shopify in my portfolio. And I plan on holding Dollar Tree for a while, despite their previous quarterly earnings report that brought the stock down 20% in late November. So the company reported a 1.08 EPS missing analysis consensus of an estimate of 1.13, and they had a revenue of $5.75 billion, and that beat consensus of $5.74 billion. Now, their next earnings, March 4th in 2020. And my question for you is, do you think Dollar Tree has the ability to show long-term growth, becoming a $100 stock again in 2020?
Yes, I do think it has that. But remember, that was not a great quarter. And today, 5 Below reported a bad quarter pre-announcement, and the stock was down 13. This cohort is not any good. But you know what? You got Shopify. Shopify is one of the greatest stories. It's all about empowerment of the individual. You're doing fine. So hold Dollar Tree and don't sell any Shopify. Innovation, people, drives capitalism, and capitalism drives innovation. You can't have one without the other. Some have tried, they failed on Mad Money Tonight. From CNBC's One Market in San Francisco, Zoetis is up 340% since it was spun off from Pfizer in 2013. And we liked it from the get-go. Yes, with a new CEO at the helm, can the move continue? I've got the exclusive. Then forget momentum. I'll tell you which stocks are finally being propelled by actual events in this market. And it's one of the greatest turnaround stories of 2019. But what does 2020 have in store for Cramer fave GlaxoSmithKline? I'm talking to the CEO with an exclusive. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.